What's going on, everybody? Mando Trading here, and this week in this video we're going to be talking about some of those long short quizzes that I had posted on Saturday. These quizzes are intended not to trick you, but to help you learn how to read price action without the use of indicators. I don't feel like they're necessary, and after these quizzes there's about 10 videos on my channel that are exhibiting how you can read price without the use of indicators. The goal is so that you have a much better understanding of price and you feel confident in doing it on your own. So if you haven't already, please subscribe, like this video, turn your notification bells on. I have a lot of content coming over the next couple of weeks and into the next year. Let's get into it. All right, so question number 1. I only did 3 this week because I had a lot of charts coming out and I didn't really want to clog up the feed that much. So I did 3, but here's number 1. First and foremost, this one actually might be a little more difficult for a lot of people. It is very helpful when you have the ability to use the tools that they have on TradingView to plot imbalances or draw ranges and such. So I think this one gave quite a few people some trouble, but that's okay. Again, everybody who's watching this, I'm guessing you're learning to read price, so that would be a good thing to get your practice in. But if we take a look here, we see a whole lot of action going on right now. So the first and most important thing here is to identify what your trend or market structure is. Remember, I'm not trying to trick anyone with any higher time frame liquidity sweeps that could in turn create reversals. This is just pretty straight up. No higher time frame liquidity is breached, and we're going to just play it as is. So if you want to pause the video, I would do so here. All right, so here is the answer to question number 1, and this is the Apple weekly chart, and I'd been tweeting about this one for quite some time now, and we finally completed my model on the weekly time frame. So you'll notice, first and foremost, we have a bullish market structure. Why? Well, this is the price run that took out these highs right here. So by taking out these highs right here, we're shifting market structure bullish from bearish, and we could set our fibs using the low to high idea. Why am I using this low and not this low down here? To me, I want to be as precise as possible with where I'm identifying the actual swing, price swing that took out that high. So this little consolidation here I'm not very interested in that. I want to really go from the last green candle or a low wick on a red candle that actually shifted the market structure. So you'll notice after setting our range, we retrace lower, getting down right here, but I'll walk through each. So if you look to your left right here, why did that bounce occur? Well, we do have this bullish volume imbalance. So there's your bullish volume imbalance bounce. Why did we reject up here? If you take a look right here, this candle right here will act as your bearish breaker. So a bearish breaker is a high, low, higher high, and the candle that moves down below it, that sets up your breaker for that retracement back into this candle right here. And when we get into that candle right here, you notice that we reverse even lower one more time, getting into this bullish imbalance down in discount. One more time, bounce into a bearish order block. One more time, sweeping this low, getting deeper into discount while holding this bullish imbalance right here. Also worth noting that I don't even have it marked on this chart, but we have a low, high, lower low. So inverse to this, we have a bullish breaker right here. And you'll notice that we hang on to the bullish breaker as well, and we take off for the highs, sweeping the high at the top. So this is my model. This is what I use when I trade every day, whether it's a higher time frame, smaller time frame, whether it's futures, whether it's individual ticker names. This is what I use. This is the idea and the backing behind it, and I try to justify every single move that's on the chart, and to me, I think I can. So this is Apple. This is number 1. If you have any comments about that, feel free to drop a comment below and I'll get to it after. All right, so question number 2. Take a look. Identify what is the market structure on this ticker, okay? How do we do that? Was there a recent high taken out or was there a recent low taken out? Remember, I'm leaving out that higher time frame liquidity, in which can create some reversals, and we're just going to use it based on the current market structure. So if you want to pause the video, you can do so here and identify whether you would go long or short at this exact spot. Sometimes I get like novels from people like, oh, well, I think it's going to go down a little bit more, and then from there I would long it, or, oh, I think it'll consolidate before dropping. The way I do it is I literally just pick the last candle prior to a pretty intense move. So, it literally is either long or short. So again, you could pause the video right here, but if you've done so already, here's the answer. And we're taking a look at AMD on the weekly time frame. You'll notice that we took out this high right here with this price run, and this is all the way back in May, June of this year. We got our retracement throughout the summer, throughout the early fall. You'll notice we do get into discount right here and get this little bit of a bounce. We do have this bullish imbalance right here, but not quite deep enough into discount to give us a sustainable bounce. And then you'll notice one last time, just the smallest itty bitty wick right here, right into that bullish imbalance back here, and right off the 79% retracement. And we take off back for the highs. I actually have a pretty sick trade that I took on AMD. It's on Twitter. If you just do @MandoTrading with the money sign AMD, you'll see I have this all mapped out from where I'd identified this setup, where I identified the move, and what really were the risk reward parameters on this trade. I mean, to me, it was about risking $10 in turn for a potential $40 return. So it played out great. Worked out with my model and all, and in the process also moving forward, the way I would do it is that now I would have my range set from low to high, and my fib lines would be in here as well. And the fibs I'm not trading off of per se, I just use them more for measurements, and I need them I don't at this point I really don't need them much, because I can kind of just eyeball something and see if it's below 50% of what the range would be. But they are helpful in that you could see exactly at what point are we in discount, at what point are we in premium and such. But we also created this bullish breaker right here. So for later on, whether at some point up here we do run into some sort of resistance, I would have my fibs mapped like this and then wait for a retracement. That would definitely be in discount, specifically probably in that golden pocket, 62 to 79%, which is the bullish breaker. You also have a bullish imbalance right here as well. So that's how I kind of forecast and look ahead. I like to anticipate rather than react, because I think reacting, you can definitely miss a lot of moves by reacting. And maybe your entry is late, and then maybe you get some sort of volatility where you get a low wick, and that low wick stops you out prior to a enormous move like this. So that's just kind of the way I look at it. I would rather buy my longs off a red candle. To me, that's limiting the risk as much as possible. And I'd rather buy my shorts on green candles that are moving up into my level, whichever it might be. So, but anyway, this is number 2. If you have any questions about it, you can put them in the comments below. I'll get to it later. All right, and last but not least, here is long short number 3. Now take a look, identify what is the market structure on this name here. I guess spoiler alert, all 3 of these were names that I had tweeted about weeks ago, in which I thought we would move higher. So they all completed, and with them completed, of course, I can use them as an example to show you my ideas without just saying it after the fact and showing you prior with old tweets and such. So again, first and foremost, identify what your market structure is and check in discount if you have some sort of imbalance there that you can use as the basis of your trade. So if you want to pause it, go for it. But if not, here is the answer to number 3, and it is Shopify on the weekly time frame. You'll notice I used this price run right here that took out this high, right? So why would I use this low here? The reason I use this low is, to me, this price run started to get taken out from that point here. I would have had my fibs at this high right here at one point, but the retracement would have not been into 50% or discount of the range. So when we don't get into 50% or discount of the range, to me, the range isn't set, and we would likely continue higher until we get some sort of imbalance to the downside right there. That would actually kind of give me the confirmation that we're going to get into discount. So here's your first discount retracement. You have your bullish imbalance here. We bump, when we bump, we run into not only a bearish order block, but also this bearish imbalance, and we reject a lower one more time, sweeping this low, getting deeper into discount. You'll notice we also take out these little equal lows right there prior to a massive run up, while all while holding that bullish imbalance down here. So the way it would look from this point now, I would have my fib set from that low to whatever the high is going to be, and then look for a retracement back down into discount. So here's one of your discount bullish imbalances at least. Also worth noting that I don't think this price run is done quite yet, because I also see a bullish breaker, your low, high, lower low, and upon that break, we can use this breaker candle as our or view it as a level of support. And right now, where we currently are, this isn't technically in discount. I mean, the lower half of it is for sure, but I'm seeing this right here, and we're not all that far off the highs from this low. So I would like to see the breaker get into discount, so that when price does run into some trouble, I believe that we have 2 points of interest of buy side liquidity at 76, which we hit this past week. And then I think the next one's like 95 or something. I have the tweet coming out later, but from that point, this would totally be in discount, and that's where I'd be looking for, that retracement following a bearish imbalance to show me that we actually will start to retrace at that point. So, anyways, if you have any questions about number 3, go for it. Yeah, these are the 3 for this week. I hope, you learned something new, and if you want to continue your practice, I have numerous videos of this on here on YouTube right now. So you could always go back and practice some old ones. But that's all I got. Thanks for watching, and we'll talk soon.